and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new week and we will be, it's a crucial one at that, given the fact that 20% of the index weight will be reporting its earnings this week. Also, it's a special day. Master Blaster Sachin Tendulkar celebrates his 50th birthday, so it's a half century of sorts there, and we will be talking about that also later on the show. And of course, if you have any stock-related queries, send them in to us on our live feed on YouTube, and we will have them addressed by our technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Well, Dow snaps its 4-week winning streak. This week, investors will look ahead to a raft of earnings from tech giants like Alphabet, Amazon and Meta. Meanwhile, Asian markets open mixed, with the SGX Nifty indicating a higher start for the Indian market around that 17,700 mark. Reliance delivers a very strong fourth quarter with an all-round beat on estimates. A strong show from the oil-to-chemicals business drives record quarterly profit, while margins too expand. ICICI Bank posts its highest ever net interest margin in the fourth quarter. Profit hits an all-time high driven by strong interest income growth, while asset quality is at its best in 33 quarters. Meanwhile, Street will watch out for IndusInd Bank earnings today. Reserve Bank allows HDFC Bank to raise its stakes in insurance subsidiaries to over 50% before the merger with HDFC. Now, this will allow the bank to buy Aberdeen's 2% stake in HDFC Life. Also on the show, Sun Pharma will be in focus as it halts shipments from Mohali unit temporarily to implement corrective measures mandated by the US FDA. Meanwhile, it has also recalled some drugs in the US, so this stock will be in focus today. And Sachin Tendulkar celebrates his landmark 50th birthday today. The Master Blaster continues to be on top of the list of many cricket fans as wishes pour in on his special day. Well, let's now get on board my colleague Neha Dave from Moneycontrol Pro to dissect ICICI Bank's fourth quarter performance. Neha, good morning. Good to have you on the show. Well, ICICI Bank has handed in a picture-perfect Q4 to say the least. Margins at all-time high. Asset quality is, at its best in 33 quarters. Tell us, what is your key takeaway from the numbers?
Thanks, Nandita, for having me on the show. Yeah, so as you mentioned, ICICI Bank, it was an all-round performance, impeccable performance in terms of earnings growth. So if I have to talk about the key numbers and dissect the earnings, everyone knows that, the loan growth has been healthy in the 20% kind of a loan growth on a yearly basis. Again, driven across the board by segments, both retail and corporate book grew by a healthy rate. But the key, obviously, the key thing was the highlight was the margins. Now, the margins on the domestic book has increased above 5%, which is a very good performance. Now, if you compare it to the peer bank, that is HDFC Bank, HDFC Bank's margins in this quarter was around 4.1%. So ICICI Bank's show on margins is excellent. Obviously, the margins have peaked, and as the cost of funds will increase with a lag impact in the coming quarters. Despite that, the earnings growth in the coming quarters will be still healthy. And one of the reasons for that is that the bank has provided enough contingent provisions, to take care of any future contingencies or slippages. Now, just to give an example, as we know that asset quality trended better for the bank, gross and net NPA declined, restructured book also declined. But again, the key highlight was that the bank created contingent provisions in the quarter amounting to 1,600 crore. Now, total contingent provisions on ICICI Bank's book is around 13,000 crore, which is equivalent to 1.3% of its loan book. Because of this high contingent provisions, future earnings will get a lot of support. Now, despite this stellar performance, one thing to be noted is that ICICI Bank's stock has underperformed HDFC Bank's stock in the last 6 months period. Now, ICICI Bank stock is down around 2% in 6 months period, while HDFC has gained around 16%. So there is a huge underperformance. In terms of valuation also, if we see, ICICI Bank is trading at a significant discount to HDFC Bank. ICICI Bank, if I have to tell you the numbers, it is trading at around 1.9 times core book value estimated for FY25 after adjusting for the subsidiaries, while HDFC Bank is trading at around 2.3. So because of this extraordinary good performance, our view is that the valuation gap between ICICI and HDFC should narrow. There is an ample scope for valuation re-rating for ICICI Bank.
Well, there is a scope for valuation re-rating for ICICI Bank, but when it comes to the deposit growth, it's still lagging HDFC Bank. Am I right, Neha? And what were your key takeaways from the management commentary for the future path going forward?
Yes, so two areas where I would like to highlight. One obviously is the deposit growth where it is lagging HDFC Bank. Now deposit growth for ICICI Bank was around 11%, which was in line with the banking industry, but yeah, lagging credit growth as well as that of HDFC Bank. Talking about the future, the management also highlighted that it will be concentrating or focusing on opening new branches. This is an area where there is a significant difference between ICICI and HDFC in the past 1 year. HDFC Bank added more than 1,400 branches in FY23, and ICICI Bank added around 500. So huge difference. Now, obviously, higher branches means the new branches start contributing in terms of deposits. So I think ICICI also will be looking for the similar kind of a strategy in terms of adding more branches in the coming year. So obviously management indicated that the margins have peaked and obviously they'll decline from this levels. But obviously it is at a very good level. So that shouldn't be a big concern for the street. And there is also the buffer of high provisions.
Right. Neha, ICICI Bank hasn't really done much on a YTD basis, but do you think it's in a sweet spot when compared to peers like IndusInd Bank, which will be reporting its earnings today, and even Kotak Bank will be reporting its earnings this week. So is it in a sweet spot compared to its peers? You already spoken about HDFC Bank, but what about other lenders in the picture?
Oh, yes. So yeah, ICICI Bank's performance stand out against all other large banks and smaller banks also. And the stock is ripe for re-rating. One thing which investors need to watch out is that the bank's credit growth in this year was driven by retail, obviously by the retail segment, and within retail it was driven more by unsecured credit, which consists of personal loans and credit cards. Now, this segment constitutes 12% for ICICI Bank, and investors should watch out the performance of this segment going forward. That would be very critical. And overall, the bank's performance has been better than all the peers in the banking industry.
Right. So ICICI Bank seems to be in a sweet spot when compared to its peers. With that, Neha, thanks a lot for taking out time and joining us this morning. Let's also get in Rajesh Palviya of Axis Securities to decode the setup for the markets this morning and, of course, to get all your stock-related queries answered. Good morning, Rajesh. Brand new week. The Nifty has been in a slumber, so to say, over the last few days, very tight range. But, given the fact that nearly 18% of the index has reported earnings like Reliance and ICICI Bank, do you expect the markets to move higher from here, given the fact that the SGX Nifty is also indicating a higher start for the Indian markets?
Good morning, Nandita. So market is in bullish zone if we look at the near-term, short-term setup for both the indices. And looking at the Nifty setup, yes, we are bullish till we are holding this 17,550, 17,500 level. We are holding our bullish view on the indices. Though there was some, bearish engulf kind of formation for on the Nifty weekly chart. But still, the indicators are still in the bullish zone. Near-term indicators are suggesting that there could be some continuation of this uptrend should continue from here onward. So as of now, 17,700, 750 are the immediate resistance area for the Nifty. And once Nifty manages to cross those levels, then possibly we can see further more upside from the current level. So those who are already holding the position and those who wants to buy the position at the current juncture, they should keep their stop losses at around 17,500 for Nifty to remain their long position. And on the breakout of 17,750, we can expect this rally to continue towards 17,900, even 18,000 mark also. Even if we look at the overall setup for Bank Nifty also, Bank Nifty is one notch better, though some corrective action was there in last 2-3 trading session or some mild profit taking was there. But still Bank Nifty is holding the ground above 42,000 level, which is a positive development on the Bank Nifty front. And if Bank Nifty continues to hold above 42,000 level, 41,800 level, then this setup is likely to remain on the bullish side and possibly on the crossover of 42,400. Bank Nifty can scale up further higher towards 42,800 also. Yes, earnings season is rolling out. Most of the Nifty companies are, now delivering the number. But as such, street is most of the numbers are in line with the expectation, and everybody is betting on the stock specific at this juncture. So I think both the indices will remain in the range, but stock specific action is going to continue further from the current levels.
Right, stock-specific action taking center stage, and no major disappointments coming in from the earnings season so far. But since you mentioned Bank Nifty, we have a couple of queries on some of these banks coming in on our live feed. So I would like to address those. Baljit Singh has written in and he wants to know your thoughts on Axis Bank. And there is another query on Canara Bank. How would you advise investors to play these two counters now?
So Nandita, due to compliances, I cannot comment on Axis Bank. It's my parent company. So I'll take Canara Bank. So Canara Bank is also slowly, steadily moving up. And looking at the near-term, short-term setup, 300 is the immediate resistance area. We believe that, sooner or later, this stock, Canara Bank can give breakout above 300. And once this breakout is done, then possibly next target for Canara Bank towards 325 to 330 in the short term. So if you are holding your position, you can remain invested as stock is holding about 200-day moving average, 50-day moving average. Your stop losses should be around 286 to hold your long position for positional basis for upside target of 320, 330.
Right, so that was the call on Canara Bank. But before I come to you and ask you your view on Reliance Industries, which reported very strong numbers over the weekend, in fact on Friday, let's take stock of what the brokerages are saying about the numbers. Well, JP Morgan has kept an overweight rating on Reliance Industries with a target price of 2,960 rupees per share. It believes that the O2C segment has driven the large PAT beat, and O2C and E&P will be driving FY24 earnings for the company. In fact, on the capex and debts commentaries, the JP Morgan has said it's positive, and it will be, it has maintained its positive view on the company on the back of that. Kotak Institutional Equities on RIL has retained its buy rating, target price at 2,800 per share, and it believes that the EBITDA, consolidated EBITDA, was 5% ahead of its estimate, and the beat was mainly led by the O2C business, as what JP Morgan has said. And with the 5G capex likely peaking soon, they believe that the net debt has also peaked out. Meanwhile, CLSA has kept a buy rating on Reliance Industries with a target price of 2,970 rupees a share. It has raised its FY24, FY25 EPS estimates by 3 to 4%. Meanwhile, Jefferies has also kept a buy rating on the stock with a target price of 3,125 rupees a share, and it believes that EBITDA beat estimates have been led by O2C and Jio. Valuations are favorable, it believes, and management has allayed concerns over leverage. And lastly, Goldman Sachs on Reliance Industries has kept a buy rating, target price at 2,890 rupees a share, and it believes that the EBITDA was largely in line, and sequential earnings growth was led by the O2C and stronger GRMs. So that's the street verdict on Reliance, pretty much positive. EPS estimates have been revised higher by some of the brokerages. Rajesh, coming to you, how should one play this stock given the fact that earnings have been pretty strong, and O2C is one segment that has led the quarterly show for this company?
So definitely, Nandita, we are holding our bullish view on Reliance, as the Reliance is consolidating since last 4-5 trading session ahead of this number. But looking at the data setup, we believe that most of the call writers are now at the 2,400 mark. So we believe that this momentum can extend towards 2,400 level. Even the put writers are added their position in, at the strike of 2,300, 2,325, and some call writing activity was call writers have covered their position for this lower strike. So looking at the setup, we believe that stock is poised for upward break, momentum from the current level, and 2,400, 2,420 could be the immediate target for the stock. If at all stock crosses about 2,420 level on weekly closing basis, then Reliance can scale up further higher from the current level also. We have already initiated our bull call spread strategy for our client in the ahead of result. We have bought 2360 call option at 29 and already sold 2420 call option at 10 rupees. So almost 19 rupees cost strategy we have already initiated for our client also. Even if you get any chance with the same prices in today's session in opening, you can investor can also buy this bull call spread to play this upside momentum of Reliance Industries.
Right, we had a query coming in on Reliance Industries from Krishna Reddy Kohli. Hope that answers your query. But moving on to the stock of the day, it's Sun Pharma. It has halted shipments from its Mohali unit to meet some of the corrective actions from the that was flagged by the US FDA. And the shipments will resume only once measures are in place. The US FDA had directed the company to take corrective measures at the Mohali unit, and it was inspected somewhere around August last year. Pharma Pack had just about started participating in the rally, and if you look at Sun Pharma, it hasn't really done all that well because, it has lost somewhere around 2% or so in a matter of 5 sessions. And, we also have a query coming in on the pharma space as to which stock is looking good. It's coming from Kamesh Sharma. And he wants to know in the Pharma Pack, which stock would you prefer buying for the long term? So what's your thought on Sun Pharma, and which stock would you pick in the pharma basket for a long-term play?
So since last 4-5 trading sessions, some corrective action is happening in the Sun Pharma, and now stock is almost trading near to its 50-day moving average, which is at around 984 level. If any breakdowns happens below 980 level, then possibly Sun Pharma can continue further more corrective action from the current level, and then lower side stock can slide towards 960, 965, which is the next immediate support area. If we analyze the overall long-term picture for Sun Pharma, it is in bullish territory, but for near-term to short-term, we believe some pressure is there on the higher side until the stock not crosses above 1020, 1030 level on a weekly closing basis. Sun Pharma may remain under pressure, and 950 to 1020 could be the possible band where stock may consolidate for some more time. Either side breakout or breakdown will decide the major direction for the stock. But overall long-term setup for Sun Pharma is bullish. If you want to pick some stocks from near-term to short-term perspective for trading point of view in pharma space, that is Aurobindo Pharma is looking very attractive. Stock has shown very good strength in last couple of weeks. Stock is forming higher high formation on the weekly chart. So we believe that Aurobindo Pharma can scale up further higher from the current level, and possibly stock can rally towards 630, 640 in the continuation of this uptrend. So one can buy Aurobindo Pharma with stop loss of 570. The mid-cap stock which we like from pharma space, that is Glenmark Life Sciences, that is GLS is the NSE ticker for the stock. If you look at the long-term setup, stock has given a breakout on the weekly chart of its falling channel, and looking at the last week action, we believe that stock is now formed a bottom after a corrective move. So GLS, Glenmark Life Sciences, can be a stock from mid-cap pharma that can scale up further from the current level. And for long-term perspective, we believe that this stock can move further higher towards 550, 560, 550 and 600 level on the higher side. So this stock one can buy and accumulate with stop loss of 425.
Right, so that's the call on the Pharma Pack. From Pharma to autos, quite a few auto companies will be reporting their earnings this week. Bajaj Auto, Maruti, plus we have a few queries on our feed on Eicher Motors and Tata Motors as well. So how would you advise investors to play these counters ahead of the earnings? We have queries from Debu K, and he's saying that he has Eicher Motors at 3,344 rupees a piece. He wants to know whether he should hold on to it or is it time to exit. What would you advise him to do?
So most of the automobile stocks also recovered from their recent low with the move in continuation of this uptrend which we are seeing from the in the Nifty also. Eicher Motor, if we analyze, the stock is now trading about 20-day, 50-day moving average. So near-term setup is turned on the bullish side. But looking at the overall setup, we believe that stock needs to cross 3,300, 3,350 level on a weekly closing basis. Then we can expect some more, short covering action, and possibly stock can further continue its uptrend towards 3,500 level also. If you want to buy this stock and accumulate for, short to medium term or for long term perspective, you can buy and accumulate because overall long term setup for the stock is in bullish zone. On the lower side, 3,050 is the immediate and important support area for this uptrend which we are seeing since last couple of trading session. So 3050 should be your stop loss, and on the higher side, 3350 is the immediate level. If breakout happens, then hold your position for 3500 target. From that fact, we believe that Tata Motor is looking very interesting. Overall setup for Tata Motor is looking very attractive. Stock has already given breakout of its almost 9 or 10 month consolidation range. And looking at the breakout, we believe that if the stocks continues to hold above 458 level, then Tata Motor can scale up further higher towards 520 level on the short-term basis. So from automobile pack, we believe that Tata Motor can continue its uptrend in the near term to short term also.
Right, Tata Motors can continue its uptrend. In fact, we had a query coming in from Collins Matthew on Tata Motors. Hope that answers your query as well. Let's also talk about another query on BSC. Kuntal has written in and he wants to know your thoughts on this stock with a long-term perspective. If you look at BSC, it is somewhere near 52-week lows. In fact, on a YTD basis, shaved off nearly 20%. Do you think it's a good long-term buy at these levels or should one avoid?
So almost the stock has corrected from a level of 1,000 and now it's trading at 450 level. Strong bearish trend is taking place in the stock since last 8-10 months. The stock continuously forming lower low formation on the monthly chart. So still nothing there on the technical front to buy and accumulate at this moment, because we feel that it will take further more time to recover from the current level. Quality is there, but still we believe that if you want to buy for short term to medium term perspective, avoid this stock. You can buy some other stocks where you can get some momentum. But if you want to buy for long term at the current price, then you can buy and accumulate, but buy a very small quantity at this moment because still strength is not there. We feel that some recovery will be there in the stock prices, but it may take time because overall structure is at this moment is weak on the across all time frame. So on the lower side, 400 is the key level, and on the higher side, 550 is the key supply zone. Till stock not crosses above 550 level, it may remain under consolidation only. Maybe it could take another 3 to 6 months also to remain in this range only. So if your focus is for very long term, then only buy and accumulate this stock. For short to medium term perspective, avoid this stock.
Well, avoid BSE with a short to medium term view. Let's also take up a query on BHEL. This comes in from Siva S and he wants to know your thoughts on this counter. Over the last 5 days, it has had a fairly decent run, up about 5.5% odd, and it is moving towards its 52-week highs of 91 or thereabouts. Should one look at this one now, or how should one play it?
So looking at the overall setup, some recovery was there in the stock prices, and on the monthly chart, the stock has taken support from its important support area of 65-67 zone, and the stock is holding those level on the monthly closing basis. So looking at the monthly setup, yes, we are holding our bullish view, but still stock is stuck in very tight range. Until the stock not crosses above 85 level, it may remain in the range only. 65 to 85 could be the possible trading range you can see in the BHEL. On the breakout above 85, yes, stock can again have a potential to move further higher towards 100, 105 level also. But if you want to buy and accumulate for some positional perspective, you can buy accumulate in this range only. Keep trading because stock is giving you opportunity on the both side. So whenever it comes near to 85, you can book some profit, again cover at lower price around 70, 75 zone. So that kind of strategy you can deploy in the BHEL at this moment. On the breakout of 85, you can hold your position for 105 target.
Right. Very quickly, one last query. This one is coming in from Prabhu on Tech Mahindra. Well, we've had the three big tech firms reporting earnings. This week we have Wipro, which will of course be considering a share buyback as well, and we have Tech Mahindra. So Prabhu wants to know your long-term view on Tech Mahindra and how should one play Wipro right now?
So Tech Mahindra is almost trading near to its multiple support area of 990, which is very critical for the stock because most of the IT stock have corrected the post earning of Infosys and TCS. So still it's difficult to say whether the stock will recover from these levels. Though stock is in oversold trajectory, but perspective for IT stocks are still negative for most of the market participants. Still nothing is there in terms of buying action from for IT stocks at this juncture. So we believe if you're already holding the position on the trading perspective, keep your tight stop loss at 980, 985. If it breaks those level on closing basis, then possibly this stock can continue furthermore downward journey towards 940, even 920 zone also. If at all any pullback comes in the stock, then we can expect a resistance or supply pressure around 1025 to 1040, which is very crucial on the higher side. So this is the trading range which we are seeing for Tech Mahindra. But on the other hand, Wipro is looking interesting. Stock is underperforming, and if you analyze the overall setup, almost it's a 1 year, more than 1 year, stock is in downtrend. Now stock is recovering from its recent low. Stock has formed a base at around 360 zone. So in next 1 or 2 trading session, if stock holds this 360 level, then some pullback action we can expect in the stock prices towards 3 to 390.
Right, Rajesh, we're completely out of time. But before I let you go, share some stock recommendations for our viewers this morning.
So first stock is from FMCG, that is ITC. Stock is enjoying its all-time high trajectory. We believe that ITC can continue further higher, and we are projecting target of 420 to 425 in the continuation of this move. One can keep a stop loss of 400. Second stock is from chemical space, that is PI Industry. Stock managed to give breakout of it's on the daily chart. Stock is holding above its 200-day moving average. So looking at the setup, we believe that PI Industry can continue further move. On the higher side, 30 to 50 could be the target. Stop loss should be 31.50. Third stock is Carborundum Universal. Stock managed to view breakout on a weekly chart. And looking at the breakout, we believe that this stock can scale up further higher towards 1095 to 1110. So one can buy this stock also with stop loss of 1035.
Well, those are the stock recommendations coming in from Rajesh. Rajesh, thanks a lot for joining in. It's a special Monday. It's Sachin Tendulkar's birthday. So hope you have a good trading day as you go forward. Well, with that, it's a wrap on this edition of Morning Trade. But don't go anywhere, because coming up next is Opening Bell.